Okay, so we're just going to make a start. Um, just apologies for the delay this morning. I think there's some technical issues on the FX Street website, which I think they're still trying to resolve. But that might get done during the course of the presentation. It is Wednesday, the 20th of October, 2014. It's going past 10 past 10 here in the UK local time. Before we look at the charts, a quick glance at the economic calendar. Not a lot happening today, but it does pick up as the week progresses. Tomorrow on Tuesday, the Reserve Bank of Australia releases their monetary policy meeting minutes. It's a bit of a mouthful, that one. We'll also have the Chinese GDP data. The market has been paying a fair amount of attention to Chinese GDP data. Whenever you get that kind of negative news slant and negative commentary where the whole world is falling apart and growth has stumbled and there's going to be a zombie apocalypse, or there's a zombie apocalypse on the horizon, then all of a sudden markets start thinking that Chinese data has become important as a gauge of uh, as a gauge of world economic sentiment, right? So watch out for that one. Watch out for that one, particularly as it does tend to affect the commodity process. Wednesday is the big day this week, I think. So we have a release of the voting pattern from the Bank of England. Last time it was 2 to 7, and if it is going to happen that in fact interest rates are going to rise in the UK, then really there needs to be a shift in that voting pattern, and it's still there's still a significant swing which is required here. You need at least three more positive votes there in order to confirm a rise. All right, so you've had Bank of England economists out last week saying things aren't really as good as people think they are, and there was expectation that interest rates would be rising in the early part of 2015, even before the general election. Now the expectation is that you are looking at the tail end of 2015, and if anyone's going to be raising interest rates, the next institution to do that is more likely to be the Federal Reserve in the USA than anyone else, right? So the expectation now is that the Fed will move ahead of the Bank of England. Also on Wednesday, you have the Bank of Canada with their latest rate statement. Interest rates they held at, I think, 1%, have been for a very, very long time. No one's expecting a shift in those rates anytime soon. On Thursday, we have the French and German PMIs for some intraday volatility, and the week wraps up again UK-centric with preliminary GDP data being worked out on a brand new formula. So that's the economic calendar as it stands. All right, let's turn our attention towards the charts. We have had a very, very busy quarter. If you guys have been following, and we had a pretty nice run of things over the course of the last few months. So we want to try and sustain that and maintain that. And what it means is to start taking your foot off the pedal a little bit, and rather than getting buzzed out with overconfidence, to start expressing a little bit more caution, right? And start trading a little bit more cautiously. It's going to be important to hold on to those fantastic gains right through to the end of the year. I mean, we're kind of up past 250% year to date, which is a fantastic figure, right? So we just want to hold on to that rather than becoming overconfident and losing grip on that return. First one up this morning is the Euro USD. We've been talking about this for a couple of weeks now, and as far as the current move north is concerned, we do look at that in the context of a corrective rally. So, as far as outlining a new bullish trend here is concerned, we've kind of seen this move north here on the Euro USD. To us, that's a corrective rally. We're not really considering at this stage that there is a reversal in the trend. If you're looking at the bear movement, which started some months back now on this instrument, so we're going all the way back to May when we had that high up in the 40s, the price collapsed to the tune of 14 to 1500 odd pips. So you would suspect at this stage that there would be a more significant corrective move than we saw while the price was dropping there. While the price was dropping there, you rarely saw a corrective move bigger than 100, maybe 150 odd pips inside of a cluster. But now we're looking at something more significant, right? So she's pulled back 350 pips, and there may be even propensity for the instrument to pull back more than that. What I'm doing with the Euro USD now is just taking a reading of the flow and the sentiment on the back of the direction of the monthly and quarterly candles. So, we've started this fourth quarter of 2014 at the 126 price handle. And what I'm saying is that so long as the price is remaining above the 126 price handle, then I would consider for the Euro USD to be remaining in corrective territory, and I would not be thinking about trend continuation to the downside at this stage. But if it happens, and if it happens that we see a collapse through that 126, then on pullbacks, we could very easily be shorting the instrument and selling it at that particular stage. So we need to see her below 126. That will be an indication of trend continuation. So long as she remains above the 126 handle, I think that she's mildly bullish, but bullish in a corrective sense rather than the beginning of a new trend. We wouldn't be able to actually ascertain that it is a new trend until she's moved several hundred pips higher. All right, so you can only ever spot a trend once it's near completion quite often. All right, so in the near term, if you're a buyer, you're good to buy above 26. But once the price falls below 26, that is a stage that I would look to get involved in shorts, looking for continuation to the downside on this particular instrument. We also have her nemesis, the USD JPY, which is giving a better technical reading than the Euro USD. As you can see, the chart is a lot cleaner on this instrument. We're actually holding shorts on this all the way from where? From 96.72. In fact, I think I called this short the last time I was here. Right, so we're holding shorts from 96.72, and we've taken an opportunity to add on to that position. In the near term, what we're looking at from a structural perspective is the wall connecting support with resistance, and that's coming in around the 95 price handle. And our perspective is that so long as the price now is able to remain below that wall, then we would consider the bear bias on the USD CHF intact, and only a break up above that wall would invalidate our bear trades, and we would find ourselves closing out the balance of the positions if we saw a move above the 95 price handle and we start getting closes above that level. Now, if you want to merge the analysis between the Euro USD and USD CHF together, remember these two pairs are inversely correlated. So, you could consider that, we're looking at that idea that on Euro USD, the bullish momentum remains intact above the 26 price handle, and on USD CHF, bear momentum is intact below the 95 price handle and below our wall. The USD CHF is a lot closer to that wall than the Euro USD, right? So the Euro USD would need to collapse 130 odd pips to break through that monthly open. And in fact, we have a kind of support wall there that would be looking to hold the price action on this particular instrument. So you could watch USD CHF actually for an early sign of the direction of move to look out for on the Euro USD. In the near term, the USD CHF is confirming that kind of mild bullish corrective viewpoint on Euro USD. So long as USD CHF keeps on breaking down, we are going to see Euro USD moving higher. All right. So just kind of bear that in mind. After that, it's just a question of where you want to take exposure. It wouldn't be wise to be taking exposure on both instruments at the same moment in time because they are inversely correlated, and all you're doing is magnifying your exposure at that point. But the USD CHF, on a technical perspective, it does seem the easier read right now, and the fact that the prices are now remaining below the weekly open, I think that's a fairly good indication of the current sentiment on this particular instrument. Okie dokie, USD JPY. So here we have the dollar yen. She started breaking down some time back, and again, I think the last time I was here, we marked that 108 price region, right? So I think we marked the 108 price region, something like that, and we had a wall, something like this. Yeah, we had a wall, something like that. Okay, so the price broke down from the 108. That was our support. You can see the pullback to that level before she continued to collapse. She went for a clean retest of the yearly open. I think that's something which is quite freaky, right? So the price opened this year at 105.20. She went and spiked and gave a very, very clean, clear bounce off of that. USD JPY, I will be looking for a shorting opportunity this week on this particular instrument. Of interest to me is the broken wall, right? So I would be looking ahead of it. Let's just change the colors here a little bit so it becomes a little bit clearer. All right, there you go. Right, so there's our wall, and there's another one here, which you can see she's kind of hit there. I'm interested in shorting the instrument, and I think that you have a couple of options here, right? So either you can imagine that she has reached the high here, right? I'm kind of imagining that she might make another push towards the resistance walls that I've got marked before collapsing. But if it happens that she's falling below the weekly open, that will be your sentiment play, right? So that will be your indication that the flow has changed in your direction. And I think at that point, you can very easily give chase if you need to on the USD JPY. If you're looking for a more kind of conservative entry here, and if I drop down a time frame, it'll kind of become visible, but you can actually just mark a trend wall. Something like that, okay? And so, if you wanted to play the wall break, you would just be shorting here and putting a stop somewhere around 107.30, right? So, okay, we've had a trend line break. We're looking at the wall holding it and a collapse to the downside. But my own preference is if I'm going to go aggressively, it will be at the upper wall, and I have that coming in just sub 107.80, right? Where my expectation would be 107.80-ish. That's where I'd be looking for that short play if I was going to make an aggressive play. If not, then I do want to see break below that weekly open. So I know that the flow has changed in my favor. And at that point, I'd be quite happy to play the shorts on USD JPY. Price action on Euro JPY seems to be corroborating what's happening there on USD JPY. But you have to be a little bit careful sometimes with these types of corroborations. You've got here a significant support wall on the Euro JPY. She's gone and hit at the same time that USD JPY was reacting to a short wall on that particular instrument. I always find that interesting. But at the same time, what it can mean is that, you know, if they're going to hold, they'll both hold together. And if they're going to be breached, they'll both get breached together, right? So again, it's a case of one or the other. You just have to choose what you want to be playing here. There is a cluster here on the Euro JPY, and that does extend all the way up to actually strike just above the 137 price handle. If we have a look where that's coming in, it's coming in 137.08. So 137.10, right, is where you'd be looking for failure. And even then, it might be worth just flicking to a H4 time frame, right, and kind of getting clear breakdown in this particular instrument, because to the downside, you'd be looking for the 134 handle, right? So it doesn't matter if you miss the first 50 pips or the first 100 pips of that. Once you're getting a kind of clear indication of breakdown, that is something that you can chase. We have a wall here. If you get an overthrow and a throwback, that does make another play on the Euro JPY. So just a little bit of caution here. You do want the week becoming bearish before you become short on this instrument, unless you're going to get your perfect entry at the actual resistance level. And at the moment, both of these instruments, they've fallen shy of that actual level. Sometimes it can be an early indication that the level itself would end up being breached. So just watch out for that. The bulls are in charge until the weekly direction changes, I guess, if we wanted to put it in as few words as possible. GBP USD. Okay, right. So as I was mentioning at the beginning when we were talking about events on the calendar, there is a huge question mark now, and it really kind of demonstrates the futility, if you like, of forward guidance, right? So, you know, Mark Carney came along, became the governor of Bank of England, decided he was going to have this new kind of open policy of describing what the bank was thinking and what the bank was up to, and, you know, pass information on to market participants as early as possible so that they could prepare for that. And so, you know, there was this whole idea at first that, hey, you know, we're watching the unemployment rate really closely, and if if unemployment drops, then we're going to start raising interest rates. The unemployment rate dropped the very next month, and then you have a new forward guidance saying, well, you know, it's not just about the unemployment rate. We're watching other data and other factors too. And then there was this thing that, hey, you know what, you know, interest rates are going to be rising, and it'll be and the market started thinking, well, you know, if they're going to rise, it's going to be next year, and it's unlikely to happen before the general election, which will be in May, and so the campaign for that will start in April. So it's not going to be before the general election, right? And then he came along and said, well, you know, it could happen before the general election. So everyone thought, all right, early 2015. And then a couple of months ago at the Mansion House speech, he said, well, you know what? All you guys seem to think it's going to happen in 2015. Have you never considered that it could happen before that? And at that time, you know, the pound was going absolutely ape, right? So the pound was going crazy because it was, well, if it's happening before that, what are we talking, right? You know, September, October? Are we talking November? It couldn't happen in December. That's just before Christmas, right? So that's not likely. But everybody started thinking November, and then after that, I guess the market had enough, and it was like, well, if it's going to happen, we want to see signs of that. We want to see what proof. Proof is going to be in the pudding now. And then we saw that huge collapse in GBP USD. And now last week we've had the chief economist of the Bank of England coming out and saying, hey, you know what? It's not likely to happen at the beginning of next year. If anything, in fact, it was as close to saying, not if anything, but if at all it ever happens, it would be at the tail end of 2015. So those expectations are starting to change, and they're being played and they're being played around with a little bit at the moment, right? But in any case, based upon what members of the Federal Reserve are saying, although they've been out talking about how important data is and how they're watching data so closely as well, but the expectation is that the Fed now is likely to be the first mover on interest rates if it came down to a death match between the Federal Reserve and the Bank of England. It would be that the Fed is likely to move first. And as well, the expectation that the Fed have made is that, even if they delay in raising the rates, when they do raise the rates, they're expecting to do it at a faster rate. So you've had members of the Fed suggesting a jump of 0.75%, right? And that would be the first rate rise, right? So it just does kind of create some interesting dynamics, especially for GBP USD and for this particular instrument, in fact, indeed, right? So as far as the flow is concerned, I think there are going to be some issues for the direction to change here. We have been suspecting that support would become established in this region and inside the cluster, but I do think that there is room for GBP USD to push and retest the lows from back in November of 2013, and we were just shy of that last week. All right, so I think there is potential there. There's room there to go for another retest, and there may be just one more short play left here. Eventually, my kind of price expectation for this instrument, and I think I've highlighted this before, is that we'd want to see some flat here, right, before a bullish breakout, and that would indicate a resumption of the bull momentum or the bull trend on this particular pair. But we want to see that flat. We'd want to see that flat play out before, rather than trying to get ahead of the curve on the instrument, if that makes sense, right? So we're going to continue to believe in the short play until the market structure actually changes, and then we have reason to believe otherwise. So it's about trying to stay rational and stay logical about actually what's happening on this pair, rather than something that we'd like to see happen. All right, so with that build-up and that massive introduction to the GBP USD, we have a short wall on this particular instrument. It's been constructed in a way that I don't ordinarily construct these walls, so we are working quite a lot through the price in order to construct the wall. But what I would say is that the reaction at this wall here is going to be important, and so long as the price remains below that wall, I very much suspect that the instrument will break down. Break up above that, that could become a trigger for a bull play, or you might choose to just sit aside at that stage. But I'm very, very interested in this, and I think that if the block holds and if the wall holds, there could still be one last significant rally left to the downside, which may even go as deep as the 57 price handle, or some way into the 57 price handle. All kind of remains to be seen right now, but it is close enough that it may end up becoming a play for me at some point early on this week. If it doesn't happen today, in all likelihood, it is going to happen tomorrow, and I will just be watching that price action looking for a stall on the underside before initiating that trade. It is significant. We're talking about a few hundred pips to the downside, but at the same time, we're not talking thousands and thousands. You have to take your profit when it's there because there is a propensity on this instrument for wild swings. Wednesday is going to be a big day, and we may well see a move for running the news, right? So even something crazy could happen on Wednesday. So it was 0.9 for a very long time. It went 2.7. What if it goes back to 0.9? Okay, just imagine the possibilities if something like that happens. Okay, so I'm looking for one last breakdown on this particular instrument. I think that she will end up going flat inside of that daily cluster. So there's the daily cluster there. I think she will go flat for a while before eventually breaking north. And so we're going to make some kind of cautious plays here on this instrument against the wall, just looking for that wall to hold in the near term. Okay, two left to go. First up is the Euro AUD. Okay, Euro AUD, right? So the wall you want to mark is this one, and that has been connected, I think, using that and using this. If you're lazy about connecting it from those points, take the first point and just connect it to the high there. And imagine you have a wall. The issue that I have with this particular instrument, Euro AED, is too far, too fast. She bumped from the 138 price handle and she's extended all the way to the 147 price handle. That rally there concerns me, and I would not be at all surprised if the instrument were to collapse and go and retrace pretty much the whole of that move, right? But certainly down towards this breakout cluster here, right? So certainly pushing towards the 39 price handle. So I've been whipsawed out of a short position on this. It was good for a while, and then it went pear-shaped. But I'm looking to go again, right? And I do believe that because there is such a significant room to the downside, it may even be worth playing your shorts at market and fading up all the way up to that wall if she does rally back towards the 147 handle, right? So if you like that kind of play, I usually prefer something that's going to give me a tighter entry than that, so I can maximize the R&R equation. But as far as the price expectation is, I think again, we're going to be back here in a few weeks' time, and we will see this instrument back at the 40s, and then eventually we're going to see her sub 40. I don't think, I'm going to say I don't think it's the beginning of a new bull wave, but I do believe that there is a significant potential here for a retracement of that bull move that we saw on this instrument. If you're looking at the Aussie dollar is looking flat right now, right? And that might suggest that there is a bullish rally on that due, and that maybe could become the cause of a fall in this instrument. It's on the watch list. Keep an eye on it. I think there's a nice technical there that you can play off of. Right, last one up this morning is NZD USD. All right, so this is NZD USD, and we've been kind of forecasting a fall in this instrument for pretty much ever and ever, and then it happened, and it's one of those where I'm regretting having such a fantastic analysis because we weren't really able to make a heck of a lot of money out of it. But all right, I think there will be second chances here. There will be second chances here. So, what's the issue with this instrument? The issue with this instrument is that the Reserve Bank of New Zealand, when they're talking about the price being significantly lower, and they were talking about it here, and they were talking about it here and here. Significantly lower is not 400 or 500 pips, right? Significantly lower is when the price goes to 70 or when the price goes to 60, right? So that is significantly lower, number one, right? That's argument number one. Number two is that at some stage, the Reserve Bank intervened, okay? At some stage, she intervened. Now, I'm kind of marking a price band here. She intervened to actually accelerate the fall in the instrument. So I'm kind of figuring that any rally, right, and it doesn't matter even if it ends up becoming a significant rally, it really doesn't. At some point, they're going to get involved again, and they're not liking to see the instrument above the 83 price handle, right? I don't think that they would be even above the 82 price handle. I don't think they'd be liking it. So this is one where I would say, just be prepared. Okay. If this is the beginning of a corrective move, those rallies will eventually fade out, and we will start getting a resumption of the new bear trend, right? And as what I'm saying is that this here is the first wave, right? This is wave one, right? So this is your first wave of a new bear trend in NZD USD. And, whether we go and we double top there, it doesn't matter. Whether we get a shallow pullback towards the 82 or even the 83, it doesn't matter. But the RBNZ in word and in deed, right? It's word and in deed because they have intervened now. Is very clear about where they want to see the Kiwi dollar. They're very clear about that. So I don't want to be in a position where I'm fighting them. I'm actually liking the idea that she's pushing higher because I think we're going to be setting up for some amazing short plays on this instrument. And if you find yourself in that trade, this could be the one, right? So not a heck of a lot of guys here, I think, because of those login problems on the website. But hey, you know what? Hands up, right? If you're one of those guys who's always looking for the one, right? There's that one trade where you think, this one's gonna do it, right? And this is the one that's there's gonna be one trade and that's gonna double my account, right? So maybe this could be the one. Maybe this could be the one, right? And I think that the technicals and the fundamentals, they're kind of completely in alignment here. But not only have you got Venus crossing Mercury, but we've also got the Reserve Bank of New Zealand. Everything is on side, not just one factor. So any kind of bullish rally in NZD-USD, and it really does depend how you like to play, but I do believe that it can be faded, and you want to be watching this very, very closely. And once you see the instrument breaking down, right? So once you see the instrument breaking down, I think you just have to chase, right? You just have to chase, you just sell it and wait, right? And let it go in your favor. And when it's in your favor, you expose yourself to a little bit more, and then you expose yourself to a little bit more and a little bit more. And the next thing you could have built up a very significant position, and all of that runs into thousands of pips in the profit. Now, I know what the issue here is going to be is transaction costs, but because of the negative swaps here. But there are ways around that. All right, so there's ways around that. You can get swap-free accounts from many, many brokers now, and that is option seriously worth looking at if you are going to be trading NZD, USD, or any of her sister crosses, right? So NZD JPY has also been a favorite of late, and again, I think she may rally up back towards the 87 price handle, but I would start looking for failure on this instrument, certainly at around that kind of price level, right? So we're going to be kind of banking on Kiwi weakness, liking the fact that she's rallying, and these rallies now, I'm looking at them as corrective in nature before we get the next significant wave to the downside on these instruments. Okay, folks, I think that is my lot. I've covered pretty much everything that I wanted to. If you have any questions, we do have a couple of minutes left, I think a few minutes left on the clock. So if there's any questions, you could post them now. I'll give you 5 seconds to do that. If not, then we're all done. Okay, looks like we're all done. Right, so it just remains to thank you guys for attending this morning. And if you like what you've heard, don't forget to check out my website. It's www.wmd4x.com, and I publish my analysis on there every week. If you find it useful, you're welcome to be on there and subscribe. Thanks as well to the team at FX Street for providing the platform. We'll be back here in a couple of weeks' time. I think it will be, let's have a look at November. So I'll be back here next on the 3rd of November, and I'm away from the 13th of November. So yeah, it'll just be one fixture in November. It'll be the 3rd of November, and then I will see you all. So I'll see you all then in a few weeks' time. Thanks very much. Bye.